If you own zero Bitcoin, you're a fool. Understand that this is why Bitcoin is the solution for so many different things in this world. If the thesis is leaking out, it will, be spread by bigger money risk managers. It's going higher because it is the best store of value and hard asset in a world where fiat currency is debasing. Been working in what I call the fiat Ponzi world for over 30 years on both Wall Street and Bay Street. Bay Street, I'm a Canadian. Now, as far as hard assets go, I support hard assets. They can range from real estate to equities to gold and Bitcoin. I believe Bitcoin actually is the best hard asset of those. I own Bitcoin. I believe Bitcoin is the best of the hard assets, but you don't need to own all your hard assets in one silo. I find it all quite funny that people dissect the word salad so appropriately, as if every word matters. I will say this. I think Jerome Powell is a horrible poker player. I think his body language is reeks of desperation. He does say that the danger is that the Fed waits too long or in both directions. And in fact, that is always the danger, and the Fed always does. They tighten too much, but they waited too long to tighten at the outset as well. So this is a bit of a ping pong match that I've seen over my 30 years. Let's be very clear. But PacWest Bank is failing after hours, okay? The bank stock is down 50% after hours. It's a very small bank, only 40 billion in assets, about 1/5 the size of First Republic. But nonetheless, it's on its way to the glue factory, okay? So PacWest is done. It's over for them. There's probably another 20 banks that are in that position. So the banking system is not sound and resilient, Mr. Powell. You are not a good poker player. And the bigger news is not the Fed raising rates again to a range of 5 to 5.25%. It's the speed at which they raise the rates and the speed at which things are now breaking. I'm going to quote former Dallas Fed Chairman Robert Kaplan, when he said we're only in the first innings of this banking crisis, regional banking crisis. And I'm also going to quote Charlie Munger, who I don't always see eye to eye on, but he said he believes there are another shoe to drop in the regional banking crisis as well. So just this afternoon is another example, and this isn't going to end. Despite what Jim Cramer says on TV, this is not going to end with First Republic, okay? That's not how banking works. Banking is ubiquitous. Every single bank is levered 25 times to its risk-absorbing capital base, which is to say you only have $4 to $6 of equity capital for every $100 of loan you make. If that loan falls in value by more than $6, your equity is vaporized and you're chewing into depositors' money. Banking is a risky business, Michelle. Everybody assumes that banks are too big to fail, and largely the biggest banks are too big to fail, which means they will get bailed out. But it doesn't mean that shareholders get bailed out, and this is where a lot of money can be lost, okay? Just because you're JP Morgan doesn't mean you use a different formula for banking. The JP Morgan has capital ratios which are similar to these other banks. Perhaps JP Morgan managed their interest rate risk better and hedged it more properly. But look, you can look at the available for sale securities and the mark-to-market losses that are on Bank of America balance sheet, and you're blown away. You're like, oh my God, that would vaporize the lion's share of their equity as well if they had to sell or mark-to-market that portfolio. So at the end of the day, banking is banking. There will be more failures. Will they be cataclysmic failures? That's the difference. Contagion, where the system breaks down. Possibly. My hope is no. But I'm telling you, you saw Credit Suisse fail. But listen, a few more failures in regional banks in America, and all of a sudden, Deutsche Bank is on the ropes. And Deutsche Bank is way more levered than Credit Suisse was. It's derivatives book, which is off balance sheet, is way larger. And Deutsche Bank is a globally systemically important bank called a GSIB. And this will not be allowed to fail outright. It doesn't mean the shareholders won't get wiped out exactly the way Credit Suisse shareholders did. A bank bail-in would cause the entire system to collapse, in my opinion, okay? You can do it in a small country like Cyprus, but try and do it in a G7 country, let alone the United States of America, the G1 country of the world. It would be cataclysmic. So I'll just tell you, I'm warning bank stock shareholders here as much as depositors, okay? Again, there's $10 trillion of bank stock market cap globally that literally could get vaporized. And that's the size of the gold market. And that's 20 times the size of the Bitcoin market cap. Well, look, here's what I would say. Please don't own a bank stock because you think it's got an attractive dividend. That is not the way to look at a bank stock. The stock prices can go far lower. This is the first time in my history that I've ever seen the Fed as a group predicting a recession, okay? This is it's unbelievable that they're actually predicting a recession as a group. And then Powell is on the outside saying, well, the group is predicting the recession, but I still think we can thread the needle and get this proverbial soft landing. I'm a betting man. I'm going to say he's going to be wrong 4 out of 4 times. I don't think he's going to be able to thread the needle on this soft landing. I know Warren Buffett says he thinks that Powell is doing an amazing job. I'm going to take the absolute opposite side of the coin. I think he's a lawyer who's sitting in a risk chair, and he's very underqualified to manage the most important risk chair in the world. And I don't think he's doing a good job. You can look at Bitcoin as being insurance on the failure of a basket of fiat currencies, a basket of sovereign debt. And in that calculation, you can take the open market CDS spreads and multiply those CDS spreads by the outstanding debt of a nation. I'm doing it in my head. $3.2 trillion would be the implied insurance value on the United States. $3.2 trillion just on the United States. What is Bitcoin trading for? Well, about $500 billion. Oh my God. If people embrace the thesis that Bitcoin could be viewed as credit default swap insurance on USA and all other countries, well, it's trading about 1/7 of its value just for the USA. And here's the really cool thing. There's no counterparty risk. Bitcoin is not an insurance company. When you hold it in self-custody, you don't have to worry about buying this insurance from an insurance company. Bitcoin is so beautiful because there's no counterparty. So there's a way to value it, and there's a way to appreciate that it has no counterparty risk. And then you could say to me, well, Greg, isn't the same thing said about gold? And I'd go, yes and no, because gold has no fixed supply. It's not transferable or portable like Bitcoin is. And most importantly, it's not auditable. There is no blockchain to audit it. And I still like gold, don't get me wrong. But at the end of the day, Bitcoin is so superior as not only a technology, but also as an auditable asset. That is why I love Bitcoin, as effectively, in my view, from a credit trader's perspective, my whole life, it is the most beautiful insurance policy on the failure of fiats globally. The USA will be the last one to fail, Michelle. The USA will be the last fiat to fail, but there's 150 other fiats that will fail before the USA, and that's why it's valuable to places like Argentina. I was flattered when Michael Novogratz, now I can't say that Novo got the idea that Bitcoin is credit default swap insurance on sovereign debt, but he tweeted that out the other day, and a lot of people came up back to him and said, hey, haven't you seen that this kid in Canada, Foss, even though I got all my training in the United States, Foss has been saying the same thing? No response. It doesn't matter. If the thesis is leaking out, it will, be spread by bigger money risk managers who tend to look at it from a credit lens. And I will tell you, another guy that I have enormous respect for at Golden Tree, Steve Tannenbaum, he loves Bitcoin for a similar reason. For guys that have spent their life in credit, man, it's like the penny drops right away. They're like, oh my God, this is exactly the hedge I've been looking for my whole life. So technology stock guys who I know have bought Bitcoin in Canada, they think of it as a technology, not as an insurance product. And then credit guys think of it as an insurance product. And you may think of it as totally something else. Store of value, store of wealth. All of this is what determines an open market price on Bitcoin. And that's the beauty of unmanipulated market, okay? Bitcoin is unmanipulated. The fiat Ponzi is manipulated by guys like Jerome Powell, who gets up there and tries to manipulate your cost of funds using antiquated technology and rear view mirror driving, okay? This is the problem with capitalism today. Bitcoin is a free and open market. It's a thing of beauty, and it means different things to different people, and it can get valued in a whole lot of different ways. Ultimately, it settles on a market price that is not manipulated. It's beautiful. And yeah, go all the way down to the G20. You'll come up with a number that's over $700,000 US per Bitcoin. Using credit default swaps. Hey, it's trading under 30,000. It's trading at let's do the math. It's trading at 1/27th of its intrinsic value, according to, I say the word intrinsic. You don't agree with me. I don't care. It's still 1/30th or 1/27th of the value that you could put on top of Bitcoin as a valuation metric. I don't sweat it. It's so stupid cheap. Don't overthink things. If you own 0 Bitcoin, you're a fool. It is the best asymmetric investment opportunity I've ever seen in 35 years of managing risk. And we're listening to guys like Taleb and Charlie Munger, who are conflicted fiat Ponzi fools who are trying to say it has 0 intrinsic value. I'll take the other side. Thank you, sir. Because I think it could go many times higher. Thank you. Well, okay, let's start with first principles. I'm an engineer. I believe in the law of conservation of energy. It's drilled into your head as an engineer. And I look at Bitcoin as digital energy. Okay, so I think very simply, in a closed system, if you're going to sell your valuable natural resource energy, oil and natural gas, for fiat dollars that can be debased, you're not, there's an alternative to sell it for digital energy. So you're selling natural resource energy in trade for digital energy that should maintain its value and increase in value over time because of its fixed supply. I'm like, man, that's a better way to price my valuable natural resource energy. Is it going to happen overnight? No. Should Canada do it? I would love Canada to do it, but we're not smart enough. But you know who is smart enough? Vlad Putin. And I'm not supporting the man, but he didn't just fall off the turnip truck, okay? He knows that selling his valuable natural resource energy for debasing US dollars is a loser's game. And he's moving away from that. And I believe there will be time within my lifetime that oil and natural gas are priced in Bitcoin. If the USA is smart enough to embrace Bitcoin, it could also maintain US reserve currency status. What will get debased is US reserve asset status, which is US treasuries. Bitcoin will replace US treasury bonds as the global reserve asset. All of these are part and parcel of a progression. When will it happen? Look, I can give a target, but not a time. I'd be a fool to do both. Understand that this is why Bitcoin is the solution for so many different things in this world. A beautiful technology and a beautiful store of value. No disrespect to gold. Don't sell gold to buy Bitcoin. Sell part of your bond portfolio to buy Bitcoin. Because if you own 0% Bitcoin, you are actually taking more risk than if you had an appropriate portfolio allocation to Bitcoin. I can prove it. We don't have time. I have a hard stop in a couple of minutes here, Michelle. But I want to tell you this. Again, don't overthink things. If I succeed in getting you to get 5% of your portfolio in Bitcoin, Worry about the other 95% of your portfolio that's not in Bitcoin, please. And I'll talk to you in 20 years. Does the US actually default on some debt? And the answer is, I don't care, because the price is going higher and it's such a rounding error. It's going up forever, Laura. I'm not sure if you know what that means, but that's the famous Michael Saylor talking to Laura Shin. Okay. It's going higher because it is the best store of value and hard asset in a world where fiat currency is debasing.